Hi friends, I am Deepak Thakur, financial planner and advice about investing in mutual funds, shares and other avenues and also in buying insurance. There are quite a few videos on financial planning, mutual fund basics and stock market basics on my channel. Please do watch these video series for thorough understanding about the subject. The link is provided in the description. Today I am going to discuss about investments in ETFs. Let's understand what is ETF. ETF means exchange traded fund. Basically, this is a basket of securities, which usually tracks the underlying assets. Now, underlying asset can be commodity like gold, silver, or it can be specific index like Nifty 50 or BSE Sensex. Likewise, it can be bunch of securities, sorted out on the basis of similar kind of motive or theme. Say for example Bank ETF, which tracks Banking Stocks Index, or IT ETF, which tracks IT-related stocks index. In simple words, it's similar like investing in other mutual fund schemes. But then the question arises, what is the difference in investing in ETF, and why one should attempt this? Let's understand this step by step. Friends, one of the major differences is time of investment. In case you buy any mutual fund scheme on a particular day, before specified cutoff time, and your funds are also transferred within specified time, then you will get the day-end NAV of that day. Whereas, ETFs are like stocks traded on exchanges through trading hours, and in case you buy ETF at any time in stipulated trading hours, you will get the rate reflecting on exchange terminal at that particular moment. The rate keeps on changing as per market movement and you can catch the momentum quickly. The rate you get is the prevailing market rate and not the day-end NAV like mutual fund schemes. Friends, this is in case of purchase of ETF, and similarly while selling also, you get the prevailing market rate to exit immediately and not the day-end NAV, like any other mutual fund scheme. Now let's see how you can invest in ETFs. Friends, these ETFs are traded on exchange and you can buy them through any of the exchange-registered brokers, I mean through stockbrokers. For that you need to have the trading account with any stockbroker, and also you need to have the Demat account to hold these ETFs in digital form. Since these funds replicate the underlying asset, these are considered as passive funds, where the fund's motive is to just track the performance of the underlying asset and generate equivalent returns. However, while doing so, there will be minimal difference due to operational or any other kind of challenges, which is known as tracking error. Friends, the fund performance is judged on the basis of tracking error. Lower the tracking error, better the fund, and vice versa. I mean higher the tracking error, worse the fund. So while comparing similar kind of ETFs, please check the tracking error and choose the one with the least tracking error. Friends, another important point in ETF investing is that the ETFs are passive funds, but you enter and exit into these actively at prevailing market price and participate in market movement easily. The next point is diversification. We always say that all the eggs should not be kept in one basket. Does that mean investing in ETF will help us in diversification? The answer is no, because if you are investing in equities or mutual funds, your exposure is already there, and if you invest further in equity ETF, the exposure will increase in equity. So you should treat ETF as methods of investing and not as option to diversify your portfolio. However, if you have exposure to particular asset class and wish to invest as a fresh exposure, you can consider such specific ETF. Let's take example of Gold ETF. Usually people invest in physical gold, especially ornaments as well as gold bars also, as they treat gold as safe investment avenue in their portfolio. Suppose you are bullish on gold and you wish to increase your gold exposure, you can think of investing in Gold ETF. If you buy physical gold, there will be lot of issues you face, like making charges, storage, security requirements, etc. The other convenient option to buy gold is buying Gold ETF, where you don't have to bother about any of those issues discussed, and this will be held in digital form in your Demat account. Since this particular ETF will track gold price, the NAV of ETF will move as per changes in gold prices, and you will be able to participate and get the benefit of investing in gold. In case the gold prices go down, the NAV of ETF will also go down to that extent and you will suffer loss. Similarly, in case of index-based ETFs, you will be able to participate in the market movement. These ETFs track any of the index like Nifty 50, Nifty 100, BSE Sensex, etc. Even you get the options of investing in sectoral indices, like mid-cap index, multi-cap index etc. In case you want to invest in mid-cap oriented scheme, you may opt for mid-cap ETF. So friends, do your detailed study or take the appropriate guidance from your financial planner and invest wisely. Investing early will always help you in creation of wealth and will reduce stress in your life. In case you require my assistance, you may contact me for further discussion. My contact details are displayed on the screen as well as kept in the description. Friends, in case you wish to open trading and Demat account, please click on the link appearing on the screen. I have provided this link in the description as well. Hope you liked this video and found useful. If so, please do give me a like, which will encourage me to do more such videos. Please do share the same with your friends and relatives and do subscribe my channel, if you like the same. Thank you and bye for now till we meet again in the next video.